Hi friends, Chitra here. Welcome to my YouTube channel. Today we are going to learn what is called previous day high and previous day low. The previous day high-low breakout strategy refers to the day trading technique that provides traders with the multiple opportunities to go either long or the short trade, because this previous day high and low will act as the support and the resistance. Okay, so when we are doing intraday trading, we can use this previous day high and low because that will give a high probability trades. The main idea is to identify the trend in its most followed by the trading move. So we can identify whether the trend is bullish or bearish when we use the PDH and PDL in our chart. The previous day high and low trading strategy requires processing a bunch of technical analysis data within the limited time frame. So it will be quite complex for the new traders, that is for the beginners, though with the high potential trades. So when we use this PDH and PDL low in our chart, we can identify the major zones where to enter into the long trade and where to enter into the short trade. Say for example, if you are getting any breakouts at the previous day high, that is the PDH, one can consider as entering into the long trade. Either ways, when we are getting any rejection from the PDH, we can consider that is the short trade opportunity. But we cannot come to conclusion that is the long or the short trade. We have to analyze the price action too. So how can we identify whether it is the bullish or the bearish setup? One can derive an intraday bias using the previous day high or the previous day low. So bearish setup. So how can we enter into the short trade, or how we'll know that the trend is weak? Okay. So bearish setups are derived from the weakness above the previous day high. Okay, and bullish setups are derived from the strength below the previous day low. So when the price is at support, that is at the previous day low, one can consider entering into the long trade if we see any green candle, because the buyers will be entering there. Okay, setups are more likely to result in success when they are taken in tandem with the high time frame, support, resistance, and in the direction as the dominant trend. So what is called the previous day high and low? So we can use the previous day high low indicator on the chart. Okay, so those who can draw the support and resistance manually, they can draw that manually. Else we can use indicator to identify the previous day high and low. So if you are trading today, we can use the yesterday's high low, that is the major support and resistance for today intraday trading. In a day trading, the previous day high low are the important reference points or support and the resistance level. Okay, so in a bull market, okay, the price breaks above the previous day high, that is the resistance, and at the start of the day and continues to trade above that level. So we can see that if it is a trendy day, we can see that the price is at the resistance, that is at the previous day high, and the price is breaking above the previous day high, and we can see that the prices continue to move in the same direction. So that is called the bull market. What will happen in the bear market then? The price breaks below the previous day low at the start of the day, and what happened, and continues to trade below that level, and we can see that that day is called the bearish day, and the price will continues to move down. Okay, so now we can see how the trade is happening. That is, if we are getting any previous day high breakout, this is called the high, that is the previous day high. This is the yesterday's high. So that will act as a resistance for today's trade. So here we can see that market opened here, and after that we can see that there is a small consolidation at the previous day high, and once we got a green candle above the previous day high, one can consider entering into the long trade. So here we can see that we got the previous day high, that is the PDH. Okay. So before we have seen how can we enter into the long trade, that is if we are getting the PDH breakout, okay, that is the resistance. So previous day high will act as a resistance. Now we can see how can we enter into the trade if the price is in between the range, that is between the previous day high and previous day low. So this is the previous day high, that is PDH, that is marked in green, and low, that is the PDL. Okay, so market opened exactly at the previous day low, this red line. Okay, and next candle, immediate next candle is the green candle, because buyers are trying to push the price up. Okay, what will be the target? Target means that is the previous day high. That is the next resistance. So if the price is taking support at the previous day low, the next prices, like where the price can go and take the resistance is, that is previous day high. Okay. So again we got the rejection, that is we got the breakout at previous day high, and we got the green candle above that also, and we got the rejection exactly at the previous day high. Okay, and we can see that the price started falling, and we can see that the price took support again at the previous day low. So now we can see how the previous day low will act as the support. So here this is the previous day low, and here the price is in the consolidation phase. Okay, so when we are getting any green candle above the previous day low, we can enter into the long trade. So we can consider entering into the trade, depends upon the which type of trader we are. We can look into any time frame chart, 5 or 15 minutes if you are doing intraday. Okay. So here we got the green candle. Okay. After that, once we enter into the trade, we got nice long trade above this. Okay. And also, as this is a range bound market, the price didn't breach the previous day high. Okay, market is in between the previous day high and previous day low. This is the Nifty 5 minutes time frame chart. So now we can see few examples from the chart. So here this green line, the high is the previous day high, and this is the previous day low. So this is the example of the 9th November. Okay, so the first red candle which took resistance at the previous day high. So here we can see that the price is taking resistance here. So one can consider entering long trade if you are getting any green candle above this. Okay, so but what happened, the first red candle itself, it took resistance at the previous day high. Okay, and this is a range bound market between the previous day high and previous day low. Okay, so this is the next day, that is of the 10th November. Market opened below, that is gap down below and below the low of the previous day low. So we have to wait for the market reaction. So here we can see that the price is taking resistance. Okay, this is the previous day low. So here we got the candle, red candle. So we can enter into the PE trade, and we got a small scalping trade here. Okay, after that we can see that the price is trying to break the previous day low, and we can see that the price is going up till 19,450. Okay, so now we can see few examples from the Bank Nifty. So this is the example of the 6th December. We can see that the first 5 minutes candle is a red candle which is facing resistance at the previous day high. Okay, so here below this red candle we can consider as selling trade, because the first 5 minutes candle itself facing resistance at the previous day high, means buyers are not able to push the price up, means above this level, that is 47,240. Okay, so here below this we can look for the selling opportunities. Okay, and here from 47,140 price took support at 46,760. Okay, so I'm not telling any trade here. I'm telling how can we use this previous day high and previous day low along with our price action trading. Okay, means the previous day high and low will act as the support and resistance for the intraday trading. Okay, so you can use this along with your price action, or whichever strategy you are using, you can use this previous day high and low. So the next day, that is 7th December, we can see that is a red candle opened exactly at the previous day low, and we can see that the low of this red candle is not taken away, and after that price reversed from here. Okay, and price is facing small resistance at the yesterday's low, and after that we can see that the green candle broke the previous day low. Okay, the second candle, that is 920 candle, has broken the resistance, that is high of the previous day high, and after that small consolidation, that is a pullback. Okay, and after that we can see that the price moved up. So one can consider entering into the long trade above this. Okay,
hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.